Hello, everybody. This is Noah and John, and we are from UrbanDigs. It is Friday, so you're going to get your weekly Manhattan market update. John, let's get right to it. I'm looking at supply. It is on the rise, 58.95. Show me that chart.
On the rise, it is. No, we are almost 4% higher than we were last week. And, we're back at levels last seen around November. And, you think about that low that the supply saw in January or so, we've increased roughly 25%. So there's a lot more supply on the market. But that being said, it still feels like a low supply market out there.
Yeah, there's a lot of things going on, John. You're right. I think we reached 4,700 in mid-January, so we're up about 25% from that levels. I think if you put an average on historical supply, it's probably somewhere around the low sixes. So we're still below that average, but we're approaching it quickly. This is actively updated supply, so we're going to see what happens. Is it seasonal? Is it macro? These are the questions that are circulating in my mind. Time will tell. John, let's shift to pending sales, the measure of Manhattan demand, 4380. Show me that chart.
Right. So 4380, you're exactly right. We are up about a 1.5% or so from last week. And, when you put this in context with supply, you're starting to see supply increase at a faster rate than pending sales are increasing. But I think it's important to note that we still see pending sales up 1.5%. So it's not like pending sales were coming down and bottomed and turned around. Pending sales kind of flatlined and have shifted. So, we talk about that low supply feeling. That's why you're still seeing pending sales increase, and we're still have yet to get into the busiest part of this market. And we're still seeing pending sales up at close to 4,400. So they're doing very well at this point.
Right, exactly. In terms of supply and demand, both are up, right? And if that arrow going up is like looking like this, then the pending sales arrow is looking more like this. That pace of supply is going faster than the pace of pending sales, and that is why the market pulse is pressured lower. That's how that all ties together and works. We'll keep an eye on that. That's like in a range of 74, 76. It doesn't seem to know where it wants to go. Very interesting. Let's go to the weeklies, John, on the UrbanDigs dashboard. Supply 567 things. That's down just a few basis points. Show me that chart.
Yeah, it's down, but you're still seeing supply coming in well over 500. I mean, this is, I think, what, 1, 2, 3, 4, 5 or so weeks we've seen that number at a high level. Yeah. And this is, again, as you enter the busy season right now, April, this is the busiest listing month. This is what you expect to see. So it's really not a surprise. Yeah. The question is going to be, how long can this continue?
Yeah, and that's, again, is it macro, is it seasonal? And April is our busiest time. So there's nothing abnormal here, except for the fact that it's just high, right? It's just very, very high. It was high last year. It's high this year. It's just an interesting, quickly changing market. And we'll see how, you're right. May, June, and July, the next 2-3 months is going to really say everything about what we need. All those questions are going to get answered. Let's go and pivot to contract signed, 346. It's down, but that is just a very, very nice number of contracts signed. John, show me that chart.
Right. I mean, if you're looking at the week over week, you can see it's down 4%. You could, might do some hand wringing on that. But honestly, no, you absolutely hit the nail on the head. You talk about how everything's sort of in balance as we increase. And so it's great to see that supply increasing in combination with that demand increasing. And, one of the reasons why we've seen such strong demand on the pending side of things is because when you look at the weekly side of things, you go back to, honestly, the end of January, the week of January 28th to now, the average number of contract signs per week since that point is a little over 300. So on a weekly basis, that's phenomenal. And you think that was happening end of January through February through March. There's just been a ton of demand in this market to really sort of offset that 25% increase in supply that we've seen.
Yeah, and I just want to point out, if I just shift to the 1 month right over here, I'm keeping a close eye on this contract signed 30-day number. And I'm looking at what's going on outside of our world in macro land with rates, et cetera, et cetera. If there's going to be a shift down in this market, if there's going to be some type of bid going down and that spread between bid ask starting to widen, you're going to see deal pace slow. You're going to see deal pace go down. That is not what I'm seeing at all. So call it FOMO, fear of missing out, buyers going in and getting those rates before they go too high, or something else going on. I just don't see demand stopping for this market. The question, of course, is where is prices, right? Excuse me. And we're just coming off of a record price quarter. And I want to shift now to the chart du jour. We got 2 chart du jours today. And one of them, Johnny, is what is the average size, or actually median size, of resale condos that are closing and populating these reports? And it's interesting when you looked into that, because that chart's just going up.
Yeah, it is. I mean, it's up, 15 or so percent from 2016. So it's like every year it's just a little bit bigger, a little bit bigger, a little bit bigger in terms of median size. And I think we really saw a pop from 2020 to 2022. That's top of my head, 5% or so. So there's there's definitely something going on. Buyers are definitely opting for those bigger places. I mean, it's not en masse. There's still a lot of studios, a lot of one bedrooms that are trading, but clearly there's a preference, a large consumer preference toward larger size apartments. And I think you're seeing more of those deals go through. And I think that's what's sort of, pushing these numbers higher.
Yeah, and it's just good to visualize it, right? It's something that we all know, and it's something we just want to see. And it's like, all right, yeah, this makes sense now. And when you look at the sales figures, again, luxury is doing great. There's a demand for larger apartments. All of that put together is going to help price trends go a little higher. The question is does it kind of collapse on itself a little bit at one point? Because you can't have that veracity of deal volume. We showed that a couple of weeks ago for the luxury sector. It's just hard to sustain that. It's already coming down, especially when you consider the fact that supply is starting to do a unique thing. I guess unique in the sense that it's been a couple of years now, and we've been talking about net deficit of supply, John. We've been talking about a net deficit of supply for so long. And if you look at this entire time frame, when this is red, right? Let's understand what we're looking at here. You got a net inventory of supply. You got new stuff coming on. You got listings going to contract. You got listings going off the market. And when you take all that into account, you either have a net negative or a net positive. And if it's net negative, supply will be pressured down. If it's net positive, supply will be pressured up. And for the first time in again, almost 2 years, it looks like we're shaping up to have 2 consecutive months and months that are higher than the last time we did this. And the last time we did this was back in 2020.
Yeah, you're right. And you look at those 2 single bars in 2021, they were March 2021, or sorry, April 2021, or was it September 2021? Those are the 2 biggest listing months we had. And, surplus only got up to 44 and then 204. So we're already doubled the highest surplus of this year. And we're stitching to almost 2 of them together here. So it says something to me about the kind of subtle shift in the market, which is that there's still a lot of demand out there, but whereas 2021 was defined by a lack of supply, the supply has come in, as we were just talking about, in 2022 here. So it's shaping up to be a little bit more of a friendly environment for buyers. It's certainly not a buyer's market by any stretch of the imagination. But if you open up your listing portal now and you're looking for places, instead of seeing none or maybe 1, maybe you'll see 5 or 6.
Right, exactly. And if I'm a buyer right now, you got a rising price action market, right? That's probably topping, in my opinion, topping out, starting to come over just a little bit, normal part of the process. You got inventory that is rising, but it's not near that average yet. If you look at a 10-year historical average, we're still kind of below that. So that's a good point you're pointing out there. But it's going in the right direction. And that demand, John, that demand, as we showed earlier today, I mean, demand is highly elevated. Supply is just starting to go a little parabolic over here. So that's why we got this net positive change. Definitely worth watching this trend and see if it evolves into a 3, 4, 5 month thing. Thank you, John Walkup, for pulling up all of this data. Very, very helpful. I am Noah Rosenblatt. We are both from UrbanDigs. Don't forget, if you got questions, we got answers. We got our forum right down here. If you want any of the reports that John whipped up today, they're going to be right over here in your research notes. Other than that, this has been your weekly Manhattan Market Update. We'll catch you next time.